Hello, and a massive hello to everybody. I hope we're all having a great weekend. This is 50 Pips, rocking and rolling here, 6th of March, 2015. No trade calls, no recommendations. Everybody responds for their own stuff. And the fact that you're listening to this means you've already understand you accept all the disclosure disclaimers on the blog, understanding that we're just performing some technical analysis in a learning context for educational purposes only. So, what's going on? Welcome to Sunday prep. So basically we're getting ready for what potentially could be a very interesting week. So it's pretty much we could call it central bank week. So on Monday we've got Kuroda speaking, so BOJ on deck. On Tuesday, apart from a lot of China data this week, we got that trade balance coming out. We've got Carney speaking, so BOE on deck. Then we go into Wednesday, and apart from some data points out of the UK, we've got Bank of Canada rate statement. We do have crude oil inventories, and we've got the RBNZ with a rate statement too, so with press conference. Then we're going into Thursday. We got CPIs out of China. Then we've got Super Mario in the house, right? So we got that rate and press conference out of the ECB with unemployment claims out of the US, and then on Friday we got unemployment out of Canada. So again, a very, very interesting week. A lot of data points, so we'll have to see how this shapes up, and there are a couple of interesting charts. We've had some very decent action. Okay, so past week a lot of things completed, right? So we're talking about the fact on that sell-off and on equities, and the fact that we were having those double bottoms, that the risk reward as far as we're concerned was those moves back to the upside, back into those moving averages. So if you look at something on the Dow, for example, we talked about this 1 to 3 risk reward back into the 50 and the 100. That's moves pretty much done, right? Very similar action on the ES, right? We talked about this move all the way back into the 100 and the 50 into the 2000 mark, and that's done, right? Our reminder, when we came back down here selling and we put in this loan, we started to rally. We said it's really important for the market to hold this breakdown area, broadly speaking, to hold the 50 back of the move from here to here to continue, right? And the market tried to sell off aggressively, so trying to play this continuation play. We came back down and we bounced again. So as far as we're concerned, this double bottom meant that there was a very high chance that we're going to go back into the 50, into the 100, and that this whole 50 back zone was going to break because of the front run here and the double bottom. So that played out very nicely. And what's going on, as far as last week we said 1950 pivotal for a move inside 1900 and 2000. Here we're going into this week now, the 2000 pivotal. So what's happening, and we discussed this a lot in the weeklies, is we're getting all these range shifts. So going into the week, the new range we're looking at is 2000 mid, 2050 high, and 1950 low. Okay, so very interesting action, very, very technical on the ES. And again, keep in mind that all the bigger shorts, or other guys will be trying to positioning for some kind of a bigger move for the year. We'll be starting to look at shorts inside this whole area, right? So it doesn't mean that we can't fail from a higher level. As far as we're concerned, we feel that we need to break new highs, and if we fail from a higher level. We also discussed the fact that when we closed the last, where were we? On this monthly candle, there's very, very high odds that we were going to break the previous month high. When you close like this, is very rare. We're getting this action. We close this candle. Is very rare that we don't break the previous month high, and that's being taken out. So far we really can't complain in terms of the technicals here on the ES and on the equity side. So what we'll have to see is how this plays out. But we still feel that if it fails, it will fail from a higher level. So again, going into the week, 2000 mid, 2050 high, and 1950 low range. If you look at it in terms of our more of a trading chart here, keep in mind that we still have that opening area from the beginning of the year, and those might be attracting. Okay, so fairly nice action on the ES. Another thing we were discussing is we're talking about crude. We're talking about the whole action at lows, and we said, if we start to squeeze it aggressively, the area we'd be looking at, there's a lot of confluence around the 3770s. That's really the key zone to watch, right? You've got this previous support where we based and we crumbled from, right? And we said this is really the area to look at. If we can hold below the 3770s, the downtrend's still in play. If we can get back above there, then the squeeze could be a lot more sustained and a lot stronger, right? So you've also got the confluence of this channel. You've got this descending trend line. So I suspect that going into the open tonight, you'll see a lot of people looking for this to try and rip higher a little bit, and then as soon as they feel, you'll probably see a lot of sellers coming in. We're not too enamored with trying to trade on Sunday open, but this is really a key zone. So I'd say this 3770s is really the level that's attracting, but really the big bull bear line for the week. But all these big swings we were looking for in terms of the percentage plays, they're pretty much done, right? Another thing to keep an eye out for, just we said is interesting, this nat gas is going to be interesting to see how we behave here. It looks like we may be putting in some kind of a bottom. It'll be very interesting to see a move higher. As far as we're concerned, we definitely feel that the next buck is going to be to the upside rather than the downside, right? We'll have to see how this trades, but it's a fairly interesting chart. Now, another thing which we're seeing some moves which should be extremely interesting is going to be on gold, right? So on gold, we talked about the fact that we felt all these failures at the 1250 were pointing to a possible retest of a move back lower to the mid-range, to the 2000, even if though it'd still catch a bid. We had all these failures here. Now, we got a lot of news, as we discussed on Twitter. I'd be very, very cautious trying to, a lot of people trying to chase this break higher on the BlackRock news, etc. We tend to prefer to fade that kind of action, but for what it's worth. But let's see what's happening here. Right here, the way we're looking at this going into the open is that as long as we hold below this previous high, we think there's room for an interesting correction here. I would not be surprised to see a lot of people trying to come here and buy this, even the highs with stops, maybe below one of those lows from last week, trying to play the press back into the 1300. It's really not our kind of play. If we hold above this previous high here, this breakup zone, then naturally, the only thing I think anybody's going to say is that the 1300 is going to attract, right? The way we look at the market, we would feel it would be healthier to see some kind of a retracement before we try to make a move up to there, if we're going to make a move up to there. I think in terms of the big area, 1300 to the upside, 1150 to the downside if you want to look at it very wide, but as far as the range to us, it looks like it's attempting one of those range shifts, so we'd be more inclined to look at it as 1200 low, 1250 mid, and 1300 high, right? So going into the equities, what's going on? We've got a lot of central banks on the wires. Just keep in mind that in terms of Euro JPY, we've got very big resistance coming in at the 120.60 mark. Keep in mind that if we rip higher into this yen, 115 is going to be the key level to the upside. That's what we were looking for on that double bottom. Very similar move to the equity side. If you're looking at, Aussie, keep in mind that we're going into a lot of resistance zones here, so I'd not be cautious about trying to chase this at highs, right? More importantly, if you look at cable, right? We're looking for a move. We've been discussing this for a long time. We're looking for a move to fill that gap. You could go back to the previous updates. We discussed a lot about Brexit and how, we felt that the position was overdone to the downside, that it would be healthy to see a little bounce, even though there's going to be an awful lot of risk here, right? Right now, our play has been for rotation back up into that gap fill. We had very nice basing action here. We had this previous support that tried to act as support, and when we came back up into this area, we said this is really important, right? If we get some momentum above this, then the gap fill is looking much more interesting. Then what we discussed last week is pay attention. When stuff stops going down on bad news, then you probably want to be flat or long, right? And what happened, we had 3 days in a row with bad data prints on in general, UK data prints, and GPB stayed bid, right? It sold off a little bit and it stayed bid 3 days in a row. You know, the market really giving you a clue there. Held back above here, coiled. Look at all these wicks here. Nice little opportunities to get long with a tighter stop if you'd flatten up on some of those initial longs, and then it's trying to play higher. So again, I would not be chasing it at highs. I think this looks like a fairly interesting neutral zone as we approach. You know, we're going to have a lot of months still of wheeling and dealing with Brexit, but I think this is a fairly neutral zone. I think there's awful lot of edge pre-referendum for longs here. There's an awful lot of edge for shorts. I don't think there's an awful lot of edge in mid-range. So again, the primary move is pretty much done. Very nice action. And last but not least, what's going on Euro, right? Keep in mind, Euro, if you look at it on daily with the moving averages, you see how it's pretty much in line. Right here, you've got the 200, the 50, and the 100. Look at it, just square there, waiting for something to do, right? As we discussed, following the previous ECB meeting, the only thing we felt was made sense was to be positioned to the downside after what Draghi said, etc. Also, technically, is just really not catching a bounce at all. Right here, we feel there's less and less edge going into the ECB meeting. You could get a lot of wheeling and dealing, a lot of positioning, right? So it's really going to be a question of how we settle post ECB meeting, right? So do not be surprised if the market's caught off guard, because pretty much everybody and their grandfather and sister in goldfish is positioned short probably, or the vast majority, to get a big squeeze. We'd expect to see selling on squeezes, but there's no reason why we can't squeeze all the way back into the 112s, 113s. You know, if you want to have some kind of a level, maybe you could look, you could fib this move down here, right? You could say, you know, there's no reason why we couldn't squeeze even all the way back into the 61.78, right? If we move down in extensions, you know, we'd be looking straight at these 105, 106s, 105s right here. But as we've been discussing for a long time on Euro, as long as we trade here in the middle of the range, it's very neutral, it's fairly balanced, and we don't feel there's an awful lot of risk in engaging, but it should be fairly interesting to see how this plays out, okay? So I hope that makes sense. I hope that was a quick... Oh, before we forget, sorry, CAD. Everybody's asking about CAD. So CAD, we're pretty much done. We talked about this in one of the live sessions, I think, actually. And basically, we had those. We looked at the swing short was for a move all the way back into the 200 DMA, right? So that's pretty much done, right? We'd get... Gap down would be nice to see a little completion of this, but that's pretty much done. As long as crude continues to rally, this will probably stay heavy. But, you know, I think the risk reward starts to favor some kind of bounce. What's interesting here in terms of this swing, which is pretty much done, if you flip on the weekly, you also see that the 50 on the weekly is coming back down into pretty much that 130. So I'd say that's probably the maximum extension you'd see before you see a healthy bounce. But it's very, very heavy. Again, similar to the move we discussed on cable, on crude, on the equities. The primary move is pretty much done here. We'll have to let things settle, but keep in mind, this is a really interesting week. All that China data, RBNZ on the wires, BOC on the wires, BOE on the wires, BOJ on the wires, Super Mario on deck. So it's going to be interesting. So I think it's a week to go in and start to, you know, lock in your profits, start to flatten out, and be ready to be unbiased and ready to act depending on what happens and what levels get hit, okay? Thank you so much for listening, guys. As always, thanks so much for all the retweets and likes. It's always very appreciated, and I'll see you guys soon. Take care. Bye-bye.